Grow CFO is where finance leaders grow together. Join thousands of like-minded professionals using Grow CFO to access the combined knowledge and experience of the finance leader community. You can join us today, growcfo.net. Hello and welcome to the Grow CFO Show. I'm your host, Kevin Appleby, and today I've got Greg Kautz with me. Now, Greg is a seasoned finance leader who's doing something completely different these days. First of all, Greg, welcome to the Grow CFO Show.
Well, thank you, Kevin. I'm pleased to be on your show.
Greg, tell our audience something about you.
Something about me. Well, when I was early in my career as an accountant working with the tax department, then going into finance leadership roles, I never thought at some point I'd be working with my son in a software company.
Wow, so that's a big transition, but you went into finance leadership roles. So tell us a little bit about the sort of leadership roles that you've done in the past.
So I was in the Canadian oil and gas industry. I was in various companies, progressing through the ranks, accountant, manager, going through those roles. And then I had an opportunity to join an engineering firm. And I took the role as a CFO. And it was quite a fascinating role. It was something where your organization would have definitely benefited me back in those days because it was all learning on the fly and there wasn't much resources to help growing CFO into a role. So there's a lot of trial and error. And at that point, technology was critical to us. They had outdated financial systems. We couldn't really evaluate the functionality, the profitability of the engineering company and the projects we were on and the staff mix. So that was the first time I really got my hands on using systems to start managing profitability, streamlining operations and processes.
So all the stuff that these days we'd call FP&A or finance transformation.
Exactly. So as I said, trial and error. It was getting some trusted business partners who had some solutions, who had experience with other like industries, and it was learning from them and trial and error and how to make the system work and achieve what we were trying to do. So that was sort of my first launch into finance and technology, directly hands-on. And from there, I launched into a career as a management consultant for 17 years, doing that exact same thing for other clients. So my specialty at management consultant was finance transformation, ERP selections and implementations, and I worked on small enterprises to large SAP implementations throughout those 17 years.
So that's you and I really with very similar backgrounds, Greg. And as you were coming up through engineering businesses, I was coming up through the chemical industry, made that similar switch into Coopers and Lybrand as it was then, later PwC, doing those finance transformations, cost reductions, and so on. So we could geek out for the entirety of this podcast on projects that I've done, but that's not really why we're here. Career as management consultant, but now you're in the age where perhaps you should have retired, you're working with your son.
Yes, exactly. You hit the nail on the head with that. I was thinking I'm just going to ride off to the sunset, slow my work days down, have more holidays. And then my son came to me, who's also a CPA, and he had an idea about a lease accounting software. He was working with a company, asked to put in one of our competitor systems. It was supposed to take 2 months and ended up taking a year. And there was a lot of challenges with that system, with journal entries not balancing, other client data sneaking into the multi-tenant instance. So there's a lot of fundamental things, but when it took half an hour to create a lease and 5 hours to run a report to get journal entries out, it was just bothering Derek, knowing that we could use technology to create a better solution.
What sort of leases are we talking about here?
So it could be anything. So it could be a building lease, it could be an equipment lease, it could be leases on the lessor side where you're leased to finance something you're buying. Various lessee, lessor. So a lot of people think it's devoted just strictly to real estate, but no, it's for vehicles, equipment, anything. And we're following the rules that happen for IFRS 16 and in the United States, ASC 842. And this is where you took leases that were normally expensed on the income statement as a line item as debit expense, credit cash, or credit payables. And now you're capitalizing those leases, adding an asset, adding a liability, and then booking them as depreciation and interest. The whole purpose of those changes was to make people investing in companies better understanding the balance sheet, because the games CFOs used to play, do I lease or buy? If I lease, I've got more room on my balance sheet to take on more debt. And from an investor perspective, it's difficult to tell the difference between a company that owns their leases or owns all their assets versus leases them. They could be identical operations, but their balance sheets would look different.
Yeah. And the great thing about accounting standards is that for the investor, they bring everything together so you're comparing in a common way.
Exactly.
I must admit, I put my other management accounting hat on and think, hang on a minute, we've got one set of accounts here that's supposed to be serving the taxman, the investors, shareholders, debtors, creditors, oh, and the management team.
Yeah.
I find that all the rules have been set up around these external parties, that 90% of the IFRSs and whatever is so that people outside the company can understand the accounts. And we end up with a set of accounts that actually end up being fairly useless at supplying any decent management information for the people inside the business.
Oh, exactly. And I go back a few years ago when Canada switched from Canadian GAAP to IFRS. I had a client ask me to help do that transition for the accounting rules. So I had hands on for 5 months going through this organization, reading the Canadian US or Canadian GAAP and IFRS line by line, doing this for a client. And it was a fascinating, and little did I know this was setting me up for a venture with IFRS 16.
Yeah. So you identify a problem. Great. And the software that we're talking about, is this really meant for the lessor or the lessee?
It's for both. A lot of the people are looking for solutions on the lessee side, and they're on the lessor side, they're trying to use their financial systems to do that. So the rules didn't change as much on the lessor side, but there is still some complications. So we built our solution to handle both sides, the lessee and the lessor.
Okay, we need a system that deals with both of those parties. But you've already mentioned IFRS and US GAAP.
Yeah.
Does that mean you've got to have two completely different ways of accounting for these leased assets in the same system?
Yes, exactly. And we have Canadian ASPE for private enterprise as well, included in ours. But they're very similar. 90% of the calculations are the same, but when it comes to disclosure notes, there is some unique differences between US GAAP and IFRS, and some of the rules for creating leases or for reassessments, modifications. So there is those nuances that is important to have in a system. And we can actually run it dual. So if you've got a large enterprise that has to report under US GAAP and IFRS, our system is capable of doing that as well.
So the solution that you've developed then is applicable wherever you are on the globe.
Exactly. Yes.
Okay. Which I think with a fintech these days, that's where you've got to be. You've got to be able to scale it.
Well, exactly. And we tie to any ERP system, whether it's SAP or Oracle Cloud, and those are global solutions. And our solution has to be global as well, as what I like to call it is a digital point solution.
If I was leasing some assets and I see, oh, yes, Greg's system looks great for me, would there be a particular sort of size of organization that you would be aiming for? You mentioned SAP, you mentioned big ERP systems there.
Yeah.
Say I'm at a lower level. We've exceeded where we'd be on Xero or QuickBooks, but we're nowhere near implementing SAP. So do you cater for those sorts of positions?
Exactly. So we do both. And so what we've got is one solution that's designed for the large enterprises with our FX multi-currency functionality, multi-standard functionality, large enterprises with 10 to 30,000 leases. Our system's designed there for the security and speed functionality. But for a company that has 10 or 20 leases and they just want to do lease accounting, our system is easy enough to use. It's got all the rules, and you're not overpaying for that functionality. Everything is based on the number of leases you have. So if you're a large global enterprise, our solution's for you. But if you're a small business that's managing 10 to 100 leases, we're the ideal solution because we bring all that functionality. You may not use it, but it's not interfering. It's not getting in the way of you just doing your journal entries for your month end or quarter end close.
Yeah. And even if you're a reasonably small company, leasing assets is something you really should be thinking about because it's a great way of raising cash.
Exactly. And it's easier to get access to leased assets versus going out to your bank and borrowing the money and doing that and having collateral or covenants. So a lot of leasing is the solution for a lot of businesses, especially in their growth mode. They need to expand rapidly. Leasing those assets is a lot of fundamental a good business decision. And I go back to my years as a CFO. I was going through those lease buy decisions myself, and we were setting up a new office in the United States. So are we going to lease our computers, lease our desks, lease the equipment we needed, or are we going to buy it? And ended up we leased.
Yeah, I remember the conversation with my daughter who set up her own business running a bakery and a coffee shop. So fairly small, one premise place, fairly limited turnover. And the coffee machine that she bought with the business broke down. It was, Dad, I can't afford £4,000 or dollars for a new machine. What do I do? Can you lease one, Kate? And that was the solution.
Yeah.
Very easily. So even the smallest of businesses can end up with a number of leased assets.
And a lot of people I see are doing computers, the laptops, they're leasing it. What they do is a 3-year lease, and then they can just bring them back and get a new one, or
Ah,
something
that's it.
happens.
Yeah. Yeah. Where technology is changing fast like that, it makes sense.
Yeah.
Vehicles, I guess, is the same position. If you need a fleet of vans or whatever, then lease those as well.
Yeah. Well, we look what caused these regulations to change. It was the airline industry, is what people on the inside say, because there was a lot of off balance sheet assets held for airlines because they're leasing everything. So that was the one that drove the rules to change. And that's an ideal industry for lease accounting is it's complex because you're renting or leasing a Boeing. There could be separate leases on the engines. There could be separate leases on the tires. There's a lot of components that airlines include in leasing.
Yeah. And the thing that then is missing, if you take the asset off the account, then the liability of the loan isn't on the account either. And you don't see this huge liability in the company when you look at the balance sheet.
Exactly.
So, Greg, your son comes along and says, Dad, I've had this great idea. How do two CPAs then take this great idea, actually develop a product and take it to market?
So what we did, I had another software during my management consulting. I had a few other irons in the fire at the time. So I had another software technology company where I was a CFO for, and it was in barcoding and RFID technology. And it was for the construction industry. And we ended up exiting that. A large company out of the UK acquired our company for the technology. And so when Derek came up with this idea, I went back to that original dev team that we had and got them to build a prototype. So we built that prototype, and it took a few months for them to create this prototype. And then what we did is we went around to accounting firms, large organizations that I had worked with as a management consultant, and showed it to them and said, is this something that's game changing enough that we should go forward? And, it was all thumbs up. Everyone's saying, you've got something here. It looks like it's going to be a complete solution. Love the design, the functionality of it. And from that confidence, we got bringing that prototype to market. They said, go for it. So at that point, we said, okay, let's do it. And we bootstrapped, meaning I helped finance a lot of it.
The bank of mum and dad.
And then we got some early investors involved who saw the vision. And here we are.
Okay. So wind that back. You've got the relationship with the dev team. And I know from recording podcasts, talking to potential developers and so on, finding a dev team these days isn't that difficult if you don't know one. But to get that initial prototype, Greg, what sort of time and cost are we talking about?
Like I said, it was probably that initial prototype was the straw dog was a few months, and then it refined over that. So a lot of that was just sweat equity between Derek and a couple of the devs. And then at that point, when we decided to go, then we're starting to invest serious dollars. Then you're starting to get into the hundreds of thousands. Fortunately enough, we got some government grants for new technology startups. So that helped pay. So it was a slow process doing that. But once we got going, then we were able to hire some permanent staff, developers. Going back to an earlier comment, you just said finding a good dev team is difficult. I was fortunate enough to work with these people before on another venture. They had some cycles that they could help do this. And then it was finding our staff. That was a challenge to find good people.
So you didn't get into spending the serious dollars till you had the prototype. You kept this very lean to start with.
Yeah, exactly.
Then you took it out, showed it to potential users who said, great job. And I presume said, oh, it'd be better if it did this and this. Then you went in and developed serious stuff.
Exactly. Yeah, that was a path.
Tell me a little bit more then about actually bringing those staff on board. You said that was difficult to find those people. What were the big challenges you came across?
The big challenge is, do you get a junior person, an intermediate, or a senior? Everyone would love senior people. We probably interviewed over 20 people during this thing, and we had quite a process. The lead developer, who was instrumental, was very stringent on who we wanted. So he actually had a challenge that he did. Anyone who wanted to interview with us had to write a game. So, he gave him the rules. And so what he would first do is he would review their coding and their structure. Yeah. And so he would get a feel of that developer, what they did. And so we narrowed it down because a lot of those developers, they're working daily with Derek and other people on the team, understanding it. They've become our support people as well. So they've grown into the role of support. So they work with clients as well. So we're looking for a lot of hats for a few key positions to wear. And so it was difficult, and we reached out across Canada. We were talking to people because everything can be done remote. And we were fortunate enough to have some people from Calgary that we ended up hiring. And it wasn't because the location we hired them, it was the fit that we had.
Yeah, that is a tricky one because I'm certainly thinking back to some of my consulting days. Well, we might have been looking at our clients with some SAP solutions. And we had a great tech team in the background in a big organization like PwC, but there was only a fraction of them that you would ever think about taking along and putting in front of a client. They were great at solving the tech problem, but not necessarily great at solving the client's problem.
Right. So as we're doing this startup, everyone was giving us advice that we should offshore all of this. It's cheaper, and that's true, it could be said, but we needed people we could work with daily. So there was a lot of working directly with the subject matter experts, looking at the code together. What benefited us, we may have paid more, but we've got what we think is a superior product. And in the end of the day, it probably cost us less and what we think is a higher quality.
Yeah. So we've not actually mentioned the name of the solution. It's
Black Owl is the company name, and we call it Black Owl Lease Accounting. No fancy name for the solution. We're going off our company name. So clients just call it Black Owl.
So who are your competitors out in the marketplace?
Well, in North America, there's companies like Lease Query, Lease Accelerator, Nikisa. And then there's some in the UK, or not UK, in the Europe. There's other companies there. So there's a few that risen to the top, and then there's a lot of small organizations like us.
So your footprint now, having developed this, how far across the globe have you managed to spread?
We're in Canada, US, and we're actually getting a lot more inquiries from Europe now. We've talked to a company in Spain. We've talked to companies in Africa. We've got a few more in London. Actually, a company, we just did a demo last week for a company in London.
So 2 CPAs founding the company, running the development. Who's the CFO out of the pair of you?
That's Derek. All my ventures before, I was a CFO. And so when we're dividing roles, I says, it's your turn to be the CFO on this one.
Yeah. So apart from having supplied some funds to start off with, what's Dad's role now?
So as the CEO, main thing is making sure we have the right resources, we have the funding that we need, and a lot is working with the sales and marketing group. So it's working with those people, And I'm been getting a lot into digital marketing, something I never thought I would be doing at this point in career. So inbound, outbound marketing. So I'm working with the vendor supporting us on that. It was just something Derek's focused on the product and the clients, where I'm trying to do everything else.
Yeah, the typical division of roles in a very small company. So to get to where you are, what stages of fundraising have you gone through so far?
So we've done, as I said, the bootstrap, we've done the pre-seed, and now we're doing a seed round. So, and then we've had grants from the federal and provincial governments.
Yeah. So seed, are you looking at VCs at this point?
Yes, we've got VCs interested and private equity firms looking at us. We're not quite there yet, but there's a lot of people watching us,
Yeah.
shall I say.
How big do you think you'll go? Do you see doing the Series A, Series B, Series C down the road?
Definitely. As we expand our market, and it isn't, which is different than a lot of software tech companies, they want that money for the product. We don't need that money for the product. As we expand, it's on growth, it's sales, it's marketing, it's support. As we grow, our model for our company is expand quite rapidly with that.
Yeah. Which must give you an advantage because that's demonstrating the revenue line's already there.
Yes.
So the running out of cash runway before you actually earn any money doesn't sound like a problem that you've got in your particular fintech.
No.
So as you're going into the market at the moment, Greg, how are you finding that market? And you've been around for a long time. You've seen what these markets have been like in the past, the valuations that have been around. How are you experiencing in 2024 that market?
On the investment side or on the client side?
Well, to be honest, both. And we're going to have a lot of people listening in that are possibly going down the same fundraising path as you, may not be quite as far forward, wondering what to expect, may have been even through the process in the past and thinking, oh, 2020 or pre-pandemic, this was all very different. What's the reality of the situation on the ground now?
Yeah, well, if you talk to people in the US, the Bay Area, the Silicon, all of that, everyone's giving all these negative indications that VC money's dried up. It's still there. It's just finding the right firms. We've talked to a lot of firms, and it's people who see the vision. Sometimes we're not solving world health or we're not solving medical challenges, and it's not on your smartphone. A lot of times people want B2C. If they want it as an app, we're not sexy. We are B2B. We're selling to
you could be more B2B.
Yeah, we're selling to accountants and freeing up their lives so they're dealing less with lease accounting and more with higher priorities. The word of mouth is amazing in that market as people start hearing about you, want to talk to you. A lot have said, well, maybe not right now, but the Series B, Series A, we want in. We've got the list is growing, a lot of interest.
So you've needed to look at very, let's say, niche VCs or potentially private equities down the road. How have you gone about creating the relationships with those people?
So a lot of it is just like this. It starts with a Zoom call or a Teams call, and it's just going over the story that we've been talking about today. People like the story, they see the market. So we are, as I said earlier, a digital point solution. So we're an add-on to your ERPs because we're bringing functionality companies can't have if you're a large ERP or your accounting system can't do it. So there's always going to be a market for it. And this lease accounting, it's not someone says, I want to do lease accounting. It's a necessity. It's something that accounting never did 5-6 years ago. It was something that was forced onto them. They never managed leases in a corporation. That was left to operations or supply chain. And now you've forced a business function onto a group that, it's not the people negotiating the contracts or dealing with this, but now they have to account for it. And now they have to know those numbers. That's the evolution of what's happened.
Yeah. And I'm smiling and thinking back a long time to when I qualified as an accountant. And that was in the days before you even had a computer in the office. And exactly. I remember client has bought something on, well, not a lease agreement, but an HP agreement. Yeah. And you're there thinking about, okay, what's the value of the asset? I've got to put that asset on the balance sheet, even though I haven't seen the cash go out the door. I've now got to look at these payments. They're paying so much a month. Okay, so how do I attribute that payment between capital repayment and interest? Do I just take the interest in a straight line, or do I have to put some sort of curve on it? And doing all those calculations
On
manually
a green
outside
piece
the
of,
accounting system, a real pain.
yeah. And that was back on the green ledger paper.
Yeah, yeah. I'm aging myself now, Greg.
Yeah, well, I'm there too with our adding machine with a tape on the side.
Do you ever feel that it's an advantage to have kind of grown up and qualified in the day that everything was done on a piece of paper in terms of understanding what the process has to be?
I would say yes. I go back to my days. I started my career with the tax department and I was doing forensic audits. So I was recreating financial statements for companies. I was going back to debits and credits. And my first 5 years was just recreating financial statements. That foundation, I don't think many people get that anymore. Everyone's relying on computers to do the output. And I think for myself as an accountant, I just think going back, having that foundation of debits and credits and the green ledger paper, that's where you hated doing consolidations
Yeah.
because when you're totaling up all the numbers, you'll never total up the right time. And you're looking for pennies and dollars. Yeah.
I still remember the day that the very first IBM PC rolled up in the office and it had this thing called SuperCalc on it. And oh, this is a piece of analysis paper. It's 32 columns wide and 256 rows down. And two of us sort of looked at each other and said, we could do a consolidation on that.
Yeah, I remember the first computer in the company I was with, you had one per floor. So
Yeah,
you had to book a time to use it.
that's right. Yeah. Before we geek out too much and destroy our listening audience completely, you've developed this fantastic piece of software that clearly solves a problem. Accountants and CFOs are your customer. How easy are they to sell to?
Some are easy. Some is they look at it, no problem, we'll do it. And others saying, well, I think we're okay. And it's a really good question. We've seen this a few times where you talk to the CFO, nope, we have no issue. Everything's good. But, you convince them to go down the chain. And once you get to the manager of financial reporting or the person doing it, they're going, oh my goodness, we really need this. We've been dying in these spreadsheets. It's taking us days to do for quarter end. Why don't we have a solution? It was funny. We did a demo a few weeks ago, and the accountant who was doing it said, we're $1 billion company. Why is this software not in my office right now?
Yes.
was
While the CFO probably owns the checkbook, it's probably somebody lower down the organization who is the real buyer of the product in terms of has the problem you're trying to solve.
Right. So it's various. So we have to adapt each opportunity. So that person who's lower down, who's the buyer, what we do is we're going to help them build their business case so they can
Yeah.
champion it to bring it up to the CFO because the CFO is fiscally responsible. They've got to make the decision. No, I think we're good with this. When I go back to my management consulting days, I had an opportunity with a client. I was brought in to do an evaluation if the company needed a new ERP system. And this organization had grown through acquisitions, and they were actually running 5 separate ERPs. And everyone, especially the corporate accounting group, wanted one ERP. And you had a lot of disjointed processes, especially with supply chain, HR, with the time tracking. It was a hodgepodge of mess. And we put forward our recommendation. And the CFO said, no, I think if we need it, we'll just hire a couple more accountants to crunch the numbers. It all depends on the opportunity and what the checkbook can allow.
Yeah. So, Greg, it sounds like a fascinating story so far and quite a journey ahead. At this stage in the business, do you see yourself retiring and stepping away from it in the near future? Or is this a real second career that's going to keep you going forever and a day?
I think it's going to keep you going forever and a day. It's something I've got a lot of friends who've retired and some are continuing on. And I have this discussion a lot. And some people say they just can't retire. They love the game. They want to keep going. And that's me. I just can't see waking up and, okay, what am I going to do today? No, I'm excited every morning I wake up, what new people I'm going to meet and what problems we can solve for people.
Brilliant, Greg. I love that. Love that. So no retirement off to the golf course anytime soon.
No, not soon. But we've got the built-in plan. Derek will eventually take the reins. This will be his company and he'll continue to grow it. I'm here building the foundation, and at some point I'll turn the keys over.
Brilliant. Greg Kautz, thank you very much for being this week's guest on the Grow CFO Show.
Thank you, Kevin. Quite enjoyed our discussion.